In the United States alone, there are approximately 15,000 car crashes per day, and quite a bit of those go completely unreported. Do I smell something funky going on? Probably, but it wasn't me, I promise. People nowadays just don't know about insurance or the way that it actually works, or when it's actually supposed to cover them. So today, I'm gonna catch you up to speed. What's going on, my beautiful people? My name is Mark Beneke, a proud member of the Westland family, and in today's video, we're gonna be covering how insurance works, the different types of insurances, and why lenders require for you to have it in order to finance you. Plus, I'll even throw in a little bit about gap in there. Now, I know better than anyone that insurance isn't really the most exciting topic. So if you find yourself dozing off, well, it probably means that I'm not doing a pretty good job. So do me a favor right now and pop yourself an energy drink. Because this is insurance, baby! Woo! Alright, so first things first, what exactly is insurance? Let me read off to you exactly what it is. Insurance is an arrangement by which a company provides a guarantee of compensation for specified losses or damage in return for payment of a premium. But to put it into words that we can all understand, insurance saves that ass in a crash. But what insurance is isn't really the issue. I think most of us understand what insurance is. How it works is where the confusion starts. Especially when good old Uncle Sam came along and told everyone, oh, you want to buy a car? Whoosh! Well, then you're gonna need to slap insurance on that bitch. And if you don't, well, then you're getting locked up. Well, kind of. You'll most likely get a fine, or maybe get your license revoked, be told that you're a bad person. Point is, it's required by law now. It's just become that necessary evil. And because of that, most people assume that there's only one type of insurance. And that leads to mishaps. The law requires what's called liability insurance. This only protects you financially in case you're responsible for someone else's injuries or property damage. It'll take care of their expenses. However, it does nothing for you. For instance, let's just say that you're driving down the road. You're being that naughty person that you've always been and receive a dirty text message. It's just too tempting. You can't wait. You look down at your phone and forget all about the road in front of you. Oh, man. Oh, damn. You've just rear-ended some poor old fart bag. Your car is pretty smashed up. His is okay, but he's pretty angry and he's demanding that you give him your insurance policy. Not to worry though, you got liability insurance. So you hand him over the information. A claim gets started and now his car is being repaired and all of his medical expenses totally covered. You have some pretty nasty whiplash and your car is completely totaled. Can you guess who's gonna be paying for that? Sucks, yeah, but at least you're not stuck paying his bills too. That is just the first layer of insurance. Above that comes what's called full coverage insurance. It covers both you and others involved in any kind of accident. If you plan on financing a car, your lender will most likely require this type of coverage. And rightfully so, as it protects both you and them in case of any kind of accident. The last thing that you want is to be left owing money on a vehicle that you just don't have anymore. And the last thing that they want is for you to decide that you're not paying for a vehicle anymore because you don't have it. Now this is where something called a deductible comes into play. It's essentially the amount that you have to pay in order to initiate a claim. Although nowadays they typically do it the other way around, where once the claim has already been started and they're about to pay you out, they just reduce it from the overall amount that they paid. You'll hear these as the comprehensive and collision deductibles. What does that mean? Well, comprehensive covers you in the event that there is any kind of accident that is not caused by another vehicle. Let's just say that you're taking a nice drive out to the lake. It's you, your family, heading over to your yearly vacation. You're all sitting there laughing, listening to your jolly music, and out of nowhere, a deer!
Hello there.
Oh, fuck. Is everybody okay? Okay, you guys are all good? Okay, everyone's fine. But your car... Oh dear. See what I did there? Let's just say both the deer and your car are... Well... I think you get it. Oh, but what's that? It's a bird. It's a plane. No, it's comprehensive insurance coming to save the day. That's just one example. Theft, vandalism, fire damage, a falling tree, glass damage, maybe extreme weather conditions, that type of thing. Now, collision is related to, well, impacts with another vehicle, or collisions. And it covers both you and the other person involved. However, there are different amounts to the deductibles on both of these types of coverages. These deductibles can range from as low as 0 all the way up to 25, 3,000, or maybe even higher. Remember, this is just the maximum amount that you would have to pay out of pocket in the event that you're in some kind of accident and have to initiate a claim. So for instance, if you have a $0 deductible, that means that you don't have to pay anything at all. This is typically the best of the best. However, if you have $2,000 deductibles, that means that if they were going to pay you $8,000, you have to subtract a $2,000 from that, and now you're only paid $6,000. Of course, these different price points also mean that the monthly cost is going to be different. A $0 deductible will naturally be the most expensive, and the higher you go, the lower your premium will be. So how exactly do they come up with the amount that you're going to have to pay per month? Because as we all know it, no two people pay the exact same rate. And that's because it's dependent on a few different factors. The first and most obvious one is based on your driving record. Any tickets or accidents will naturally cause your premium to go up. How much you use your car is another factor. Let's just say that you're a driver for DoorDash. First off, they'll typically charge way more because it's technically considered business use. But since you'll also be driving quite a bit more miles, that means that there's an increased chance that you could crash. And that sends your premium bill way up. Location, location, location is what the realtor says. I'm actually a realtor too, by the way. But location also plays a factor in the amount that you're going to pay per month. People who live in a big city will typically end up paying more for insurance. And that's because there tends to be more traffic and also more vandalism, more theft. All of these things are an increased risk. Also, if you end up parking on the street instead of a garage, you're going to pay extra. Now for this next one, don't try to make any kind of argument that they're being ageist, but your age will definitely affect your premium. I already tried to make that argument, and I lost miserably. Twice. Maybe 3 times. If you're 25 and under, you'll most likely end up paying a much higher bill. Now this next one is a little bit more touchy, but your sex. And no, I'm not talking about how often you do the hanky-panky. I'm talking about whether you're a male or a female. Statistically speaking, females are actually way more careful drivers. So even though a lot of people like to make the joke that women can't drive, they're actually the ones that are a lot safer. Not to mention that there's a reduced chance that they will end up getting a DUI in comparison to the man. Therefore, a female will typically have a much lower rate than a male would. Now the next one is probably the most obvious one of them all, but it's the car itself. The overall value of the car will actually affect the premium that you end up paying, as well as how easy it is to steal, the safety record, the cost of repairs, and also the level of risk that it puts you into. Let's use a Dodge Challenger Hellcat, for example. First off, it's a very high value vehicle and it's highly sought after, meaning that a lot of people would hop onto the chance to jack it at any opportunity. Also, if they have to pay the vehicle out, since the cost is so much higher, then that means they have to charge you more. Since it's a sports car, typically the safety rating is reduced. And since it's a sports car as well, it puts you at a higher risk. Hell, come on, let's be real here. When's the last time that you saw somebody driving a Hellcat 20 miles under the speed limit? It just doesn't happen. People tend to just slap it into gear and drive as fast as they possibly can at any opportunity. And that level of abuse that you're putting the car into, well, it increases your chances of a breakdown. All of these things drive up the monthly premium tremendously. Now, another question that I always get asked, what happens if your vehicle is reported as a total loss? Well, in that case, the insurance will pay you out the total replacement value of your vehicle. If you own it free and clear, then all of that money goes to you. But if you're financing it, then whatever you still owe goes to the lender, and whatever is left over, that's yours. However, what happens when you owe more than the car is worth? Let's just say that you just bought it and you owe $20,000 on the car, and you get into an accident and the insurance comes along and tells you, we can only pay you out for 16. In that case, hopefully you ended up getting something called a GAP, Guaranteed Asset protection. This is a true saving grace when it comes to these types of events. Very often they will offer it to you at a dealership, especially with used vehicles. If they don't offer it, I highly recommend that you do request it. Seriously, I don't always recommend that you buy ancillary products, but this is a must. The cost of GAP is usually not very much, and it is invaluable. You have no idea how many of our customers have been really early on into their loan only to get into an accident and be stuck continuing to have to pay for a vehicle that they no longer have. GAP coverage is a godsend here. Energy send, non-religious send, whatever. Seriously, you do not want to mess around with this, and for the very small fee, it'll cover you in case of any kind of accident that the insurance cannot pay out the full loan. It is an optional feature, but it is definitely the one that I will always recommend to everybody. We all think that we are the best drivers out there, but accidents happen, and the thing is, we never know when. And that's where insurance can be a truly beautiful thing. But there's something else that you need to know about when it comes to getting everything in line to make your car shopping experience as smooth as possible. And you can learn all about it by watching this video down here. Thanks, and I will see you there. Okay, bye!